Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. The centre has cleared a total compensation of 22,000 crore rupees towards losses on LPG sales, which has come in as a reprieve for oil marketing companies. According to analysts, this move will only trim but not stem off all the losses. So HPCL, BPCL, IOCL, all of them were in focus. They fell around 1.5%. But remember, they of course surged as well in yesterday's trading session. So as I said, Cabinet has approved that amount. And sources say that the companies actually asked for 28,000 crore rupees and they got only 22,000 crore rupees as a one-time grant. So of course, it is lower than what was expected, but it is a positive move that has been undertaken. Motilal Oswal says that this would serve as a breather for all these oil marketing companies. And if other things remain the same, that is crude prices are not higher, rupee is stable at current levels, then EPS for IOCL for second quarter and FY23 would both change to profit versus losses earlier. And percentage change in EPS for BPCL will be 45% for quarter 2 and 48% for FY23. For HPCL will be 40% for quarter 2 and around 25% for FY23. In terms of EBITDA as well, they have put down some numbers. For IOCL, pre-compensation, their EBITDA would have been 122 billion rupees. Post-compensation, it will be around 232 billion. For BPCL, it will be lower. They were making losses of EBITDA losses of around 48 billion, but it will come to an EBITDA profit of 2 billion. For HPCL, the losses will be trimmed to around 111 billion. So all in all, it will be positive. Kotak says that OMCs had incurred a loss of nearly 48,000 crore rupees till June 2022, and they estimate a further loss of 5,500 crore rupees in quarter 2. However, relief is only partial for all these OMCs as LPG losses are still higher. But it's still a positive according to Kotak. They say that with declines in international LPG prices, LPG losses have now vanished. So it's not a big worry for these companies. However, retail losses still continue as far as fuel sales are concerned. So that is something we'll be watching out for. But this is coming as a positive for all these companies. This is about the oil market, oil and gas space, that is. To the fifth headline now, Adani Wilmar fell close to 3% after the company came out with its second quarter business update, in which it said that macro challenges continued to impact the company. Mangnam, tell us what is their revenue like and what else is impacting the company?
The overall revenue for this quarter is expected to grow in low single digits. The edible oil business for the company, while it witnessed higher volume growth, it won't translate so much into their revenue, and that's primarily because prices of palm and soybean oil have fallen between 40 to 50% from the peak, and the company, to protect its market share, has had to pass on all those price cuts to the consumer itself. So despite a high volume growth, it will not translate as much into the revenues, and margins will be impacted this quarter as well. The two parts of their portfolio which are doing extremely well, food and FMCG on a low base, the company intends to increase the contribution coming in from these verticals going forward. So that has grown 40% as expected, and industry essentials, which is the B2B part of the business, has also grown 20%. But these account for a relatively smaller chunk in their overall portfolio, as a result of which the weakness in the oil market is likely to affect their quarter.
All right, that is about Adani Wilmar. Meanwhile, Sterling and Wilson fell over 3% after it came out with a weak set in the second quarter. Vivek Iyer is here with the details. Vivek.
That's right. The stock in focus was Sterling and Wilson Solar. Now the company posted its Q2 results, and it's a subdued quarter as far as Sterling and Wilson Solar is concerned. Remember, this particular quarter, most of the industry actually was facing the brunt of much higher raw material prices and also much subdued tendering as well as ordering activity. Now, when you're talking about the results, remember the company is present in the solar EPC as well as the operations and maintenance segment. Now, revenues for this particular quarter was down almost 78% on a year-on-year basis, coming in at a little over 312 crores. When you're talking about the bottom line, the loss came in at close to 300 crore versus the loss last time of around 284 crore. Even on the operational front, the company posted an EBITDA loss of 370 crore to offset some of the negative news flow, given the fact that the results were quite subdued. The company did say that the company got awarded the contract for an order from NTPC. This was for an EPC project as far as NTPC's Gujarat Ran of Kutch is concerned, and this particular order is worth a little over 2,200 crore. So a lot of news flow as far as Sterling and Wilson is concerned, but the stock ended the session with cuts.
Okay, all right, Vivek, thanks a lot for making sense of that stock move today. A look at the aviation space now. 11 airports are next in line for privatization. Sources tell us that a cabinet note on the same would be sent soon. That's not all. We also learned that both Go Air along with SpiceJet have applied for collateral-free loan under the Emergency Credit Guarantee Scheme. Abhimanyu Sharma joins us with all the key developments. Abhimanyu.
Government sources have indicated that SpiceJet and Go Air have sought funds under the modified ECLGS scheme. Bank of Baroda and Axis Bank are slated to start dispersing funds to airlines in 4 to 6 weeks. A cabinet note is also expected to be sent soon to approve privatization of next bundle of 11 airports. With the festive season raising airfares, the government is expecting the uptick to improve the financial health of airlines and has no plans to reintroduce price caps on airfares or interfere with market dynamics. The government is yet to take a call on the demand of the Aviation Ministry seeking inclusion of ATF in GST. Sources said that ATF prices are down since the 1st of October, of which a 3% fall is due to a lower crude price and another 3% is due to negotiations. However, the 6% benefit in ATF prices has been undone by 10% devaluation of the rupee. Coming to SpiceJet, the aviation regulator will decide on extension of the 50% cap of SpiceJet's operations. However, government sources clarified that the 50% cap had not affected even a single flight of SpiceJet as lesser aircrafts were being deployed, and the government is ready to consider the airline's request to deploy more aircrafts as it does not want to constrain air capacity. The union government had also conducted discussions on use of 1% or 2% sustainable fuel in aircrafts, over which IOCL is already working on 2 pilot projects in Gujarat and Panipat. However, the availability of sustainable fuel for aircrafts continues to remain an issue.
Okay, that is all the update from the aviation space. Abhimanyu, thank you so much for that. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.